Hello, welcome to Market Update. My name is Edward Nyarko. South Africa hopes to host the 2022 Investment Conference on March 24th. And this conference is expected to rake in about 1.7 trillion rand into the South African economy. We're going to talk to Tepo Ramadibe, who is Head of Corporate Affairs, Industrial Development Corporation of South Africa, to find out more about this investment conference that is coming on. And then we'll cross over and talk to Habib Adam, who is an economist, about Ghana's debt to GDP ratio, which is about 80% now, according to the latest report by the World Bank. So before we continue, let's pick the business language, and then we'll go to the stock market. Maurice Ogwete is standing by to walk us through the activities midweek today. Hello, welcome back. The presence of the bears on the Ghana Stock Exchange has been reduced significantly, even though we are still in a negative terrain. Maurice is standing by to just give us updates from the Ghana Stock Exchange.
Thank you very much, Edward. I think that what you said is just a summary of what's happening on the market today. We see some significant improvement on the market, but that didn't shift, year-to-date return to the positives. We're still in the negative. Today's particular change was driven by the financial stocks, and so we see the financial stock index moving up some 13.38 points.
Wow.
We also saw Standard Chartered Bank also making a PESWA gain. That's why we see 13.38 points rise in terms of the financial stock index. And so cumulatively, we look at the composite index, and it's a 7.37 point rise, even though year to date we are at negative 1.84 and then negative 0.98% by way of the financial stock. By the close of trading, Edward, 541,830 shares exchange hands, and that is brought the market capitalization to 63.5 billion, moving from 63.3 billion as of yesterday. A significant jump we see there. So let's see the gainers. We had two gainers for today. We see Ecobank Transnational Incorporated. They gained a PESWA. As of yesterday, they were doing 13 PESWAs per share. Now they're doing 14 PESWAs per share. They sold a majority of the shares on the market today. 382,986 shares, valued at 53,618 Ghana cedis and 4 PESWAs on the market. We also see Standard Chartered Bank. It's been a while they came to the market. They also sold 16,200 shares, and that's valued at 2,916. That's 2,916 Ghana cedis by way of value. They also gained a PESWA. As I said, they were doing 17 PESWAs per share. Now they're doing 18 PESWAs per share. Today, MTN Ghana wasn't much active on the market, so it was the financial stocks, that led the push on the market, Edward. I mean, if this particular trend continues, say in the next 2 to 3 days, then we should be seeing the year-to-date return moving from the negatives. I mean, now it's at negative 1.84%. I mean, if we see this particular trend continue for, say, a week, then we should move to the positives, which is the hope of players on the market.
Great. That is Morris Ogbete giving us an update from the Ghana Stock Exchange. We go for a short break. When we come back, Habib Adam is standing by to talk to us about the crossing of the Ghana's GDP to debt ratio, which is about 80% now.
Which one are we doing first, please?
Hello, welcome back to Market Avenue. We have Habib Adam online to talk to us about the Ghana's debt to GDP ratio, which is around 80% now, according to the latest report by the World Bank. Habib, if you're online, good evening.
Good evening.
Great. Habib, the World Bank indicates that looking at what is happening, the debt to GDP ratio is about 80%. What do you think might have contributed towards this development?
Yes. Good evening to your listeners. First of all, if you look at the current composition of the debt, what has accounted for the rise in the percentage can be attributed to two things. First is the depreciation of the cedi, because ordinarily once the cedi depreciates, the value of the debt becomes natural. Even with that, adding more because of the cedi depreciation, it just naturally it will go up. And when you convert the dollar to the cedi, you see that it's going to be very high because of the depreciation. The second issue is that you realize that in government usually contract loans, and it sometimes takes several years before they become due. So there are always moratorium. So you contract a facility to do big projects, and then they'll give you a moratorium of 3 to 5 years. So all these things, when they fall due, then you realize that they become the figure goes up. You also realize that the energy sector alone, the debt in the energy sector also contributed a lot, especially with the current 500 billion USD that the government is invested for energy that we do not even consume. So all these things are contributing to the rise in the percentage of the debt of the GDP.
All right, great. So
let me also add that
okay,
debt is not a bad idea, but it depends on how it's being utilized. The loans that you contract, how you utilize the loans, if you invest them in projects that are self-financed, then we can be hopeful that they will pay for themselves.
All right, great. So what should be the way out? How do we minimize or bring down this debt from the 80% to the sustainable threshold, which is below 70%?
Okay. Now, what we need to do currently is to increase our domestic revenue and also cut down our expenditures. Secondly, we also have to look at the in terms of the, how government financing of certain projects. We should concentrate more on projects that are self-funded, that can pay for themselves, than using a lot of it for consumables. We can also look at the hello, can you hear me?
Yeah, I can hear you. Go ahead. Go ahead.
Okay. Yeah, we can look at other alternative sources of funding so that we do not have to just go for loans. For instance, if we are able to bring back a Japan funding from our mineral deposit, we leverage on that instead of going for loans. That will also reduce the burden on government. Because as we continue to fire up the loan, they become, the interest payment will compound our problem. So these are the things that I think that government should be looking at.
All right. Thank you very much, Habib Adam. We'll have to bring you to the studio, and then we'll look at the various revenue streams that need to be looked at critically to be able to mobilize more revenue to reduce the debt that is hanging around our neck now. But we'll go for a short break. When we come back, we're going to talk to Tepo Ramodibe, who's the head of corporate affairs in South Africa's Industrial Development Corporation, to find out more about... Okay, I think Tepo is back online. Tepo, you're welcome.
Thank you very much.
Great to have you.
It's a pleasure to be with you.
Great. The South African Investment Summit or conference is to take off March 24th. What exactly is this conference about?
If you recall, in 2018, President Ramaphosa, on taking leadership of the South African government, set a target to attract 1.2 trillion of investments into the country over 5 years. So the conference is a significant strategic initiative to ensure that we're able to showcase investment opportunities in South Africa, but also show how South Africa as a gateway to the continent offers a lot more opportunity for multinational companies who want to set up shop, but also look at investing in other areas and other regions of our continent. So it's a important opportunity to showcase not only the country as an investment destination, but also show the opportunity that the African free trade, market, offers to the international investor. So,
in your view, which are some of the sectors that are really crying for investment that your returns, as an investor, your returns are also going to be very encouraging, that you would like to put your money there?
If you look at South Africa broadly, the core productive sectors still remain manufacturing, mining, infrastructure, but the renewable energy sector is growing. It has its energy deficit with power access, so renewable energy is an important part of the energy mix. What you also see in the last year, the hydrogen economy, green economy, so green power production is also quite critical. The oceans economy is there, but high-tech industry, we're seeing a focus on, the Western Cape as an anchor for technology investments. So that for us becomes a viable focus area for international investors. But agro-processing, agriculture still remain, the cannabis industry, that economy is, the legislation is being approved. So that remains a viable investment destination. But for us we're seeing South Africa as a conduit for new investment in new frontiers like oil and gas, upstream gas industry and the like, as something that we want to showcase for the international, but also continental investors. For us, when you start looking at the relationships we've built with, the West African economic base, Ghana, Nigeria, and the Ivory Coast as some of the other countries, but also on the East. And I think it's high time that all these economic groupings come together to showcase what the potential is. But because of our strategic location in the South, but connectivity to each of these regions, we see South Africa playing a critical role, as part of opening up this continental market.
Cost of doing business is an issue that investors always look at. How is it like in South Africa now? What do you want to push this time around to be able to woo more investors?
Great, because I think we've listened and understood what some of the challenges are to setting up shop. So the National Invest South Africa, we've created one-stop shop to make it easier for entrepreneurs to come through the country, set up, but also not deal with the red tape. So it's really simplifying, administrative procedure. But also we encourage investors to start looking at our special economic zones across the country, which provide investors with targeted investment incentives, preferential tax rate, and export support. But critical, and I think I'd want our Ghanaian partners to also understand and appreciate, is that government has launched what we call Operation Vulindlela to accelerate key economic reforms, to secure not only confidence in sectors, but also regulatory certainty, but also unlock greater investment. So this is really the government's efforts that we support and we've seen in play to ensure that the red tape is reduced, but South Africa is a conducive investment territory.
In 2018, you were able to get a commitment of about 770 billion rand during the conference. This time we're looking at 1.2 trillion rand. The commitment that were done in 2018, have you been able to follow up and to know how much has come through into the system?
Yes. So to date, we've attracted 770 billion. So we're halfway through the target that was set by the president, and a lot more still needs to be done, which is why we want to ensure that this year's investment conference, we get closer to the 1 trillion mark, but also can start to showcase what some of the investment pledges have translated to. A number of key projects across a number of sectors, including manufacturing, the automotive sector, have already played out. And these are investments that have already translated to jobs, but tangible projects that have come off the conveyor belt, as you may say. So we look forward to not only receiving continental and international investors, but also showing them what the pledges have translated to, because I think after a while, pledges are pledges, but it's really what people can see tangibly that showcases the impact of what the investment conference has meant for us. So we look forward to showcasing that.
Great. In terms of the African Continental Free Trade Area, how does this conference feed into the narrative to help move Africa to 1.2 billion market? We be able to achieve some of the goals we set for ourselves.
As recently as last November, December, the president had a business delegation of South African business people in Ghana, in Ivory Coast. But this was really to build on the economic diplomacy and relationships we already have. So our regional partnerships include not only participation in the Southern African Development Community, the Customs Union here in South Africa, but also partnering with ECOWAS as a base, but also the new Continental Free Trade Area for us presents an excellent opportunity to showcase this market that we have, this collective market of billions with exceptional opportunities. So trading under the free trade agreement, is open, and we encourage companies not only based in South Africa, but also elsewhere in the continent to see South Africa, as a preferential spot for access, to take their products out, but also to showcase and tap into other markets in the continent. I think, looking at the infrastructure, the logistics, the harbor, the air traffic, infrastructure, we see ourselves playing a wonderful linkage role that allows real opportunity and economic activity in Africa to thrive.
Tapo, jobs are high on this agenda. Do you have knowledge about how many jobs you intend to create and help the youth in South Africa to find something to do?
As you're well aware, you may have picked it up all the way in Ghana that unemployment is at an all-time high, and that creates social challenges. So the intent behind attracting investors and setting up businesses is really to ensure that there's more jobs created. We're able to cater for the youth that are graduating but need to be gainfully employed. So that's also the objective behind the investment conference. Set up business, create jobs, but also ensure that there's a trickle down of economic benefits in a way that reduces the social pressure and some of the unintended consequences of high unemployment. So that is also the intent. So from a target perspective, it's year on year we have the country sets targets around job creation, but all of it has to be complemented by economic growth, because it's only when there's economic activity and economic growth that the jobs can literally be brought down. So we look forward to ensuring that all these investments that are coming through are really opening up and tapping into this job potential. But year on year, from an IDC perspective, we've got a KPI around not only funding for industrialization, but also developmental impact, which is the number of jobs created. And year on year, I think we've been able to, fund businesses that have been able to absorb thousands of people into the labor market. But we know that with international investment, continental investors will be able to do a lot more and ensure that we create massive employment in the country.
So in total, how many investors are you expecting in terms of participants during this conference?
For this year, we're targeting 1,000 delegates attending the conference. Last year and in previous years, because of the COVID pandemic, we literally resorted to a hybrid, limited attendance with a lot more people interacting virtually. So we're expecting the very same number. It's still half of what we've done in previous years in 2018 and 2019 prior to. But we know that a lot more delegates and interested investors will be connecting virtually in the various sessions. So we also encourage our colleagues and investors and business people in Ghana to also register to participate virtually so that they're also exposed to the discussions, but the opportunities for business and investment in South Africa.
Finally, we've seen that the rippling effects of the Russian invasion in Ukraine in oil pricing. How is it like in South Africa?
South Africa has always had, oil, as a primary input for a lot of our energy requirements. To date, Eskom, which is our electricity utility, has also indicated that while they don't have, primary dependence on Russian oil imports, they've got suppliers that have exposure in that area, but reserves and stocks were still quite high enough. So there hasn't been an immediate, ripple effect. But geopolitical, dynamics, will continue to, if this strife continues, I'm certain all of us across the continent will feel that effect. And we hope that the powers that be, the politicians, are able to negotiate a ceasefire that allows a return to normality and safety and, of lives. Because I think this in itself, while it's a political crisis, has economic impact, but also social impact that all of us are interested in seeing, come to an end.
All right. Thank you very much, Sepo Ramodibe, who is the head of corporate affairs, Industrial Development Corporation of South Africa, for your time. So this is how we wrap up Market Avenue for today. My name is Edward Nyarko. God willing, we'll come your way again tomorrow. Shalom.